Tuesday, May 22nd, 2018, Monaco 64, home of alternative economics and contrarian views. I'm going to look at the markets a bit more today, at charts, technical analysis. I love technical analysis. I look at fundamentals as well. When I worked in the markets, people said, oh, are you a fundamental analyst? Do you analyze fundamentally, or do you look at the technicals? And I used to say, I look at both. And right now, there's some interesting things going on in the commodity markets, especially oil, the CRB index, silver, gold, and that's all related to the bond market and interest rates. And I think we're getting to a point where the Fed is going to be unable to hide the fact that they debased the dollar. Because everything that's concrete and that's real or tangible is going to start going up, in my opinion. And why do I say that? Well, you look at the charts, which I'll show you in a minute, and we're getting what's called a turtle signal. And what's a turtle signal? Well, it's a trading program developed by Richard Dennis in the 80s. And they talk about that here in the New Market Wizards. And I've how can I say, looked in the turtle trading program. I did a course, online course on it years ago, how to use the turtle trading. And it's basically a momentum trading and very simple. If you break a 22-day high, you buy. If you break a 55-day high, you buy as well. And there are techniques to manage your risk, how to leverage, and it's usually in the commodities market, leverage markets. You can apply it to other markets as well. So yeah, if you want to know more about that, just Google turtle trading and look into it. I'm not going to talk about it exactly how it is now, but I think the commodity markets are showing very bullish signals. And I think that's just what was needed for gold and silver to make their new leg higher. I know gold has come off lately in the last few weeks, but I'm going to show you some charts, and I think we're actually ready to move higher. Before I do that, though, let's look at what we're doing this morning. It's just gone 8:33 a.m. London. So where are we right now? Spot gold, $12.90.50, down just under $2. The range has actually been $12.88 to $12.96 this morning. Silver is unchanged at $16.50. Range has been $16.44 to $16.58. The Dow is up 39 points. Dow Future, S&P is up 2.5 points. The NASDAQ is up 6.5. So stock market fairly contained this morning. I'll look at charts of that as well. Currencies are rebounding very slightly this morning. So I saw yesterday, I wasn't in during most of the afternoon, but I saw that yesterday we had an unusual day, that the dollar was strong early on. And so, the precious metals were weaker, of course. And then after the U.S. came in, it went the other way. So that's unusual. So this morning, cable is 134.45, only up 20. Euro is virtually unchanged, 117.94, and the dollar is unchanged as well against the yen, 111.10. Crude oil up again. It's at 72.68. WTI, that's up another 0.5%. So, and the 10-year yield this morning, I think that's around 306. Let's have a quick look here. 307. So it's up 1 basis points. So now let's have a look at the charts. I had look at quite a few charts this morning. First one I want to show you is the gold to silver ratio, and this is a daily chart. And I've spoken a lot of times in the past that to have a bull market in precious metals, you need to see silver outperforming. And this is what the chart shows as the price of gold divided by the price of silver. And as you can see, we topped just above 80, around the spike to almost 83 there in earlier in April this year. And now it's been going down. It's at 78. So silver is outperforming gold. And if you look at the longer term chart as well, it looks like we've put in like a quintuple or a quadruple top. And yeah, it's looking better. That ratio, it looks like silver is going to outperform, and that's a good signal. So what else are we going to look at right now? Yeah, let's just have a look at the Dow quickly. So this is where we are right now on the Dow, and this chart is not like the this is from the spread trading platform, so it's got intraday moves like post regular hours. It's not exactly like if you take a daily chart like of the Dow, but it's pretty much similar. You can see the 50% retracement of the high this year, and the low is roughly at 25,056 here. So that's where we are basically right now. To go higher, the next target would be probably around 25,500, which is roughly around the 61.8 retracement. And of course, there's the high from the end of February, which was 25,800. That's the Dow. So what else? Crude oil. Crude oil looking very interesting. So I've got, this is what I was talking to you about, the turtle signal. I mean, this is a massive turtle signal, because if you look at the high in May 2015, so 3 years ago, we broke that earlier this year, and then it went up, and it was kind of a false breakout because it came back down at the beginning of February. But since then, we've just gone back up and gone right through that 2015 high, which was around $63. So that's what I'm talking about. The momentum now is there for oil, and that trend line now comes around 70, just under $79. And this is, of course, a weekly chart. So looking very, very bullish oil. So what about the CRB? First of all, let's look at what the CRB is. It's the Thomson Reuters Core Commodity Index. You can see the index is comprised of 19 commodities. You got aluminum, as the Americans would call it, or aluminium, as the English would call it, cocoa, coffee, copper, corn, cotton, crude oil, gold, heating oil, lean hogs, live cattle, natural gas, nickel, orange juice, RBOB, gasoline, silver, soybeans, sugar, and wheat. So everything humans need to really survive, you know, all kinds of things that are tangible there. And you can see that the main component is Q there on the chart, and that's crude oil. And crude oil is starting to move. All the other commodities have been kind of, you know, going nowhere. So that's why the crude oil component is really important. So now let's look at the CRB chart. So I've got one here going back 2 years. And you can see the other thing I was talking to you about, the turtle signal. We got like just like in crude oil, we broke out in February and then it came back down, so it was like a false breakout. But now we're going back up, and the level was kind of around let's see, 196, and we broke out to over 200, came back down in the end of February, and now we're at 205. So it's really breaking out. I'll show you a 3-year chart. You can see that the bottom was just at the beginning of 2016. We had the bottom in gold in December 2015. So now we're getting this move. You can see there, it's breaking out all the commodities, all the components. I think that's what precious metals needed to finally break out. And as I said, I know gold and silver have not, especially gold recently, has not done well. But let's go now to a gold chart just to show you where we are really. This is a weekly chart, and this is going back again. Well, it goes back to all the way to 2014, but it's a weekly chart, and I've drawn this trend line. This is from the low at the end of 2016, the low at the end of 2017, and look where we are right now. We went below that trend line yesterday. Now we're back above it. So that's very interesting. Have a quick look at the silver chart here. So silver, you see silver is holding quite well. I know it hasn't gone anywhere, but it hasn't really made any significant lows on this move in gold. So it's like a non-confirmation. What else we're gonna look at here? Yeah, Deutsche Bank. Some of you have asked about Deutsche Bank. Well, this is a weekly long-term chart going back 20 years. And you can see that in the crisis of '08, we dumped all the way from above 100 euros, and the low was like 13.90. So we're even below those lows of the crisis. In a few, let's see, September 2016, that's when it broke 10 euros. And you can see that we're very close now to breaking that level. Will Deutsche Bank be allowed to fail? Probably not. It's the biggest bank in Germany, and Germany is such an important economy. So could they nationalize Deutsche Bank? Wow, yeah, definitely. So that's Deutsche Bank. Have a look at the bond market, the 10-year yield, and why I've been talking about how important the 3% level is. So this is a line chart going back to 1988, so 30 years. And you can see how important this break has been here. And if you go back to the end of 2013 as well, when we got back above 3%, that high there was just around 303. So that's why it's so important now. And that's like a turtle signal as well for yields. Of course, in 2008, when oil went up to like $150 almost, the economy was doing well. But what happened right after that? We got the collapse. I know it wasn't just because of oil, but it probably also triggered that because the economy nowadays in the West is like all consumption based. So if all those components are going up in value, all those real life components that the majority of people need to survive are going up in value, they're going to have less and less disposable income to spend. They're going to have less income to pay debts. And that's what's happening now. So you can see there, everything is conspiring to like kill Goldilocks. That's what it looks to me. And now I'll show you another 10-year chart, more short term. And it's and you can see here, if you go back to that high in beginning of 2014, that was, and I drew a line here. So you can see we're just above that line. We're breaking out. Will they be able to keep those yields from moving higher? I don't think so. I know Jamie Dimon thinks it's a signal of a strong economy. I don't think so. Goldman Sachs, I saw an article today. They're actually saying, Goldman says, and this is from Zero Hedge, and I quote, it says, at some point higher rates will turn from signaling growth to tighter financial conditions. Definitely. Not just financial conditions, but it's a symptom that everything, the dollar is going down against tangible goods. Yeah, and the dollar might be going up against other fiat currencies, but other fiat currencies, as I said before, are going down as well. So yeah, that's the technical picture. Commodities are rearing their head, its head. So it could be yeah, it could be something to keep an eye on. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on DTube, which is a blockchain based version of YouTube on steemit.com. And you can also follow me on Twitter. And if you'd like to donate to the channel, there's some links below in the description. I'm on Patreon, I accept PayPal, and I've got addresses for cryptocurrency wallets as well. So I'll talk to you later and have a good day. Take care. Bye.